Welcome back to the nationally recognized Real Estate Radio Network's Don and Gino Real Estate and Finance Radio Show on your hometown station, AM 1220 KHTS. Make sure to get great information or ask your important questions at donandgino.com. Now, back to your friends, Don and Gino.
Well, we're having a blast today, and always one of our favorite guests and expert contributors, Neal Weichel with RE/MAX of Valencia, one of the top real estate professionals, and he's a true professional. And for over 22 years now, Neal, I think you've been in the market.
Yes, sir. 1991.
I got you by 3 years, believe it or not. 4 years. 4 years actually. I started when I was 12. Anyway, but it makes a difference going through these kind of waves in the market. We've seen this before, and now, but this is unique. I mean, we went through this, but it wasn't the Great Recession. It was a pullback in the market, but this has been pretty unique. I've never seen a rebound as quick as this. Have you?
No, this is completely unexpected and frankly just surprising.
So, you know, that always brings up the term of, you know, how much of this is artificial through government stimulus that took years to finally trickle down to the economy, and can we see it continue?
You're talking about appreciation?
Can we see appreciation continue? Can the market stay hot? Can we see everything continue to go as it's going? Because I think the appreciation we're seeing is fixing a lot of things. It's not just fixing the housing market, it's fixing the economy.
Yeah, well, I'm sure that's true. I mean, I can just say this. I do think that we will continue to see appreciation through the spring and into the summer, and then I think you're going to see things level off. You clearly are not seeing appreciation the same way in some of the upper price ranges that you are in the lower price ranges. The lower price ranges are just really, really feeling it because it's that unbelievable combination of tons of buyers, including investors, and super cheap money and complete lack of inventory. So you have the $350,000 Sunrise come on the market, get 7 offers and sell for $370,000. There's no way it'll appraise because the comps don't support it. So listing agents like me require the buyer to have no appraisal contingency, and that's exactly how we close the deal. So that's happening. That's not happening with your $950,000 Sand Canyon home or the property I just listed out in Hasley Canyon. Even though I sold it right away, I didn't sell it with multiple offers. I sold it with one offer. It was a motivated buyer. So as far as appreciation goes, I think what we you know, we're California. When we go up, we go way up, and when we go down, boy, we decide to go down too. And, and there's a lesson in there for anybody when it comes to real estate. And that's why I wanted to approach this whole bubble topic on the show today. But as far as appreciation goes, there's still some room in this market for appreciation. I think everybody believes that for the simple reason there's not enough homes for sale. I mean, if there was 900 homes for sale or interest rates go up, you'll see this market cool off in a New York minute. Okay,
good
but with this kind of cost,
it's a perfect storm.
Yeah, this cost of money combined with the lack of inventory, appreciation is inevitable. It's not even an argument. It must happen.
Well, and now the appreciation can happen because of great agents like you that are making it happen and making sellers realize their opportunity, because a lot of sellers did not know their opportunity. They did not know how much their values have gone up. We're trying to share that. You shared a great basically a breakdown at your the State of the Union. Sorry about that. At the State of the Union, you were talking about how they took a poll of how many people thought that the real estate market was still in trouble.
Yeah, Americans, and this is a national poll, over 70% still think that we're in a depressed or declining market. Now, obviously, that includes areas that probably still are a depressed or declining market, but it's a perception thing. Interestingly, of all the appreciating markets, 9 of the 10 fastest appreciating markets are in the West. So our perception, of course, when we hear about Vegas going crazy and San Diego going nuts and Phoenix turning around like nobody's business, you know, we're affected by that because we hear it, we see it, we have friends maybe that move there and they tell us their story and all the rest of it. But, you know, most of Americans still think that real estate to some extent is in trouble. Not in Santa Clarita.
Yeah. There's no doubt about that. In California, I know just in 2012, home prices rose 12.6%, double digits.
There you go.
Yeah, well, also you got the first in, first out, right? Like you said, in California, we either go up fast or we go down fast, and we got hit hard.
Right.
And so now we're seeing it first. We've got great appreciation. I hope that goes all the way across to the East Coast.
Well, and now we have the the sales, now that you are seeing the prices increase, it's providing these comparables, like you were mentioning, which
Right.
allows the next person to sell their home for more and so forth and so on. We didn't have that problem because we had, the good thing about getting rid of all the distressed homes is we continue to have these bad comps.
Right.
That kept the prices pushed down. Now
Correct.
that you just mentioned 3 out of 26, I think it was.
Correct.
That means there's not much in the distressed sales to keep the prices down anymore.
I tell anybody who will listen, good comps are replacing bad comps. So if you've got a 5.5% or a 6% interest rate and you want to stay where you are, that's great. Call Don and Gino, get your refinance started. They'll call me. I'll get you the comps you need to pull your appraisal, and you're done. And you can get that down into the 3.5%, 4% range, and save yourself some money. If you want to move up and take advantage of the, see, everything is fueled by cheap money.
Yeah.
As long as we keep these interest rates where they are, there's so much opportunity. As soon as they go up, and who knows when that will be, nobody knows, then you'll see things level off. It's just that simple. I mean, you can wind your watch to it.
And you know what's really interesting about that is that people think rates do need to go to 6% for that to happen. That's not true. Rates go to 4.25%. The refinances are gone for sure, and the purchases will cool down a little bit, but there's still going to be buyers out there. So there's definitely a threshold. And on the refinances, anything over 4%, most people have already refinanced if they're over 4%, and they should. If they're not, they should call today, do something about it. But definitely, that's one of the things we're seeing is that for the refinances, the threshold's around 4%. I think for purchases, the threshold's probably going to be around 4.5 to 4.75 before the market cools down.
Yeah, maybe. I mean, as long as the rates stay low. But, you know, buyers, they want 3. You know, they heard somebody got 2 and
telling you,
7/8, and what do you mean 3.5? I want that 3, you know? So,
Boy, don't we know that?
yeah, I'm sure you guys hear it all the time. Well, I hear it too. And here's the point, though. Here's the message. This is really for those people that were upside down a year ago and aren't today. Were upside down 4 years ago and aren't today. Maybe they got a loan mod and they were able to, you know, turn it into an amortized loan, so they're paying down their principal. And now I've sold a couple homes in their block for $100,000 more than the last one sold for, and they can. That's the point. Is somebody who's got 6% because they could never refinance. Now they can call you and refinance because they've got some comps to do it. This is the first time in years, guys.
Yeah, and I appreciate you helping out my area because you've sold now one and about to sell another one in the Enclave track up by us, and you've increased my value by $100,000 just with one home you sold.
You're welcome.
I'm like, oh, Neal sold that baby. Because we lost a lot of appreciation or a lot of equity position, and thank you for helping me recover that.
Well, you know, it's funny you even bring it up. I really take that very seriously. I mean, we sold a home in Tesoro, and this home is $250,000 higher than the last one that sold, which was a short sale. It's $180,000 higher than the next to last one that sold, which was a bank owned, and it's $160,000, and his model matches, okay? The point is everybody in that part of Tesoro now that couldn't refinance before, as soon as it closes next Friday, they'll be able to refinance because that comp, a good comp, replaced 2 bad comps, okay? And that's happening every neighborhood in this valley right now. So pay attention because good stuff's out there.
Yeah, and you're eliminating short sales.
That's exactly
I
what's
mean,
happening.
there's a lot to be said. A lot of people don't want to have to short sell, without a doubt. And now if they can, but they may need to get out of their situation or
Sure.
want to take advantage of this opportunity. And now with these good comps, their short sale is now a standard sell, and it changes everything. It keeps them in the market. It avoids the embarrassment. Unfortunately, there are some people that are embarrassed about it when they shouldn't be. It's part of our market. It wasn't their fault. But now there's opportunities for them because of these increasing prices. And then we wanted Neal to help us share that message because nobody sells more homes than Neal out here. He sees it, he's got the numbers, and he's selling these homes for substantially more than people ever would have thought.
Yeah, and I mean, I appreciate all the nice plugs, but you know, I'm far from the only one in this valley. There's a group of about 100 of us that we work together all the time. We're talking together all the time, and we're sharing information, which is just so important. This market is rapidly transitioning. Did I say rapidly enough? Rapidly transitioning. So pay attention. Talk to your real estate professional. Call Don and Gino. Call me. Whatever. Make sure you have the information because opportunity is out there, whether you're moving up, moving down, or staying put, to really take advantage of what's out there, which is great interest rates and opportunity.
No, there's no doubt. And you mentioned networking, which is key, because I know you network with some of the top real estate agents in town, as do we.
Sure.
And if you're not networked out here, your opportunities are diminished substantially, because if you aren't networked with the top agents to find those properties that are coming up, so that you can prepare your buyer for it. And if you aren't getting your buyers prepared, meaning if you out there are not fully pre-approved with a local direct lender, working with a local real estate professional, your opportunities to diminish, I'm going to say, by about 70%.
Yeah, it makes a big difference. You really have to work with somebody who's local and in the marketplace every day and connected in the marketplace.
And trusted. I
Yeah,
mean, seriously,
sure.
I'm sure as a top listing agent, you look at who's on the other end of that transaction, real estate agent-wise and lender-wise.
There's no doubt about it.
Okay.
Yeah, yeah, you can't feel very, very
And that's
comfortable.
protecting your seller. You're not just based on being overly particular, not getting them the best sell price. You just want to make sure that they can sell it if they do.
Sure, they're counting on me to represent and protect them.
Very cool. Well, good stuff, Neal. And we have a few more items to go to because we were talking about now inventory and where it's up. I want to ask Neal again to clarify a little bit why inventory is so low. Because everybody kept thinking there's shadow inventory, but there's reasons why the inventory is so low, and Neal's going to help us clarify that a little bit and so much more. When we come back to the Don and Gino Real Estate and Finance Show on your hometown station, AM 1220 KHTS.